Good morning, all. So Blackham Resources is a operating gold mining company in Western Australia. We're currently producing about 75,000 ounces of gold. We're basically unhedged, and we're about to enter a period of development to increase that production by the end of the next calendar year to about 120,000 ounces of production. Our costs are about $10 million a month. They've come down significantly over the last 4 months, and we're essentially generating substantial free cash flow for the first time in a long time. The company's gone through a fairly difficult period over the last 12 months, and it's just coming out of that exercise of both writing the management team and the strategy and the balance sheet, we've actually made significant progress towards that in the last 4 months. And to give you an example there, we've gone from a negative cash flow of at site of about 8 million last quarter to about 9 million positive this quarter, and that is expected to continue from here and increase. And we've got a low capital option to basically take the operation to a significant upgrade to a path actually of developing. On the previous speaker actually showed how many 250,000 ounce plus operations in single locations are available in Australia and overseas in first tier jurisdictions. Wiluna mine site, which has been consolidated the first time in history, it's a 100-year-old area, consolidated for the first time into a single ownership, has that capacity that within 3 years to actually produce over 250,000 ounces and have a mine life well over 10 years, with a resource base of 6.4 million ounces and a current reserve base of about 1.4 million ounces. And that 1.4 million we expect to take to about 2.5 million ounces of reserve within a 12-month time frame. Very much like the previous speaker, it's about drilling inferred known material in known mine areas where we've got development so that we can use them in the final mine plans. So we're in pretty good country. We're at the northern end of the Kalgoorlie gold belt, where the biggest mines in Australia for gold sit, other than obviously Telfer and Boddington, which are in different geological settings. To the right of us there, Jundee, that's one of the Northern Star mines. They're 60 kilometres away, and then to the west is Peter Cook's West Gold, and they're producing about 300,000 ounces of gold from a couple or 3 mining areas actually over there. Where are we? Look, there's a limited amount of time, so I'm not going to go. This is on our website, or you come by the booth. We can give you a presentation. The main change for us has been cleaning up the balance sheet and our debt. We're currently sitting on about 2.4 million. All our numbers are Aussie dollars, by the way. So I'm sorry for the confusion. We haven't sort of converted any numbers there, but our net debt's about 2.4 million. Total debt's about 9. And that's changed significantly. We've done a lot of work to clean that up. We sold some non-core assets, brought $20 million in over the last few weeks, and really reset the company so it could actually look, instead of being on the defensive, to try and get on the front foot and now try and demonstrate the real underlying value, both of the production profile that we have, but the optionality of a very large geological resource that's been dormant and waiting to be fully developed in modern times. We are doing some capital works, pretty limited. We're doing some stripping on a pit to the south, 20 kilometres away, which will provide the base feed of free milling material, and some work underground in a small underground mine to feed some high grade into our current free milling process plant. Wiluna is going to have two streams of production, free milling material that can be cyanide leached, and we'll be building a new concentrator which we commissioned towards the end of next year to actually produce a concentrate. We have the mine site in the past has converted that concentrate through a BIOX plant into gold. We don't intend to do that in this next stage. We've got offtake arrangements already. We're going to be selling that concentrate to the market at very good payables and actually getting better as we continue with this work. We are running a process at the moment which started 4 months ago when the company needed to look towards capital. It was quite vulnerable, so we are running a process on the corporate side to bring in potentially a partner and a funder that has led to some non-binding term sheets. Whether they're complete, we don't know, but that may be something that comes out in the next few weeks. And we are running a process for a funding arrangement alongside our free cash flow as well for this next phase of development, which will be concluded towards the end of this year, and we'll have that all published and clear. The capital structure will need some work over the next 6 months, which I'll tidy up, because obviously we've been working on tidying up the balance sheet and getting the company reset from an operating perspective. We've had to issue a fair bit of paper out there, as you can see, so that's going to have to be consolidated over the next 3 or 4 months back to a lot less. Our mining contractor is a fairly reasonable shareholder, and that's due to the legacy issues over the last 2 years in terms of converting some of their payables to support us to get through a difficult period, which has finally come out of that. And then recently we've done a small placement, and most of it's taken up by this group Delphi out of Germany. And in fact, just today they've announced they've been buying the market since then. They're up to 12% shareholding at the moment in the company. So that's the current operation. That's the process plant. And as I said, we're producing gold at about 1,500 Australian. We're selling it at 2,200. We're basically unhedged. We've got some puts out next year, about 12,000 ounces, and we've got very little hedging in the short term, next couple of months. And we're one of the few Australian producers with no hedging in front of us at the moment, which gives us opportunity, both in terms of decent margins, but any funding opportunities going forward. The board has been there's 3 of us only at the board at the moment. We'll look at changing that as we go forward, but the management team's been renewed. We've basically flattened the management structure, and the previous CEO's moved on, the COO, and we've reset the plan around a much more focused, deliverable strategy. The previous owners did a great job putting the assets together, getting them to this production stage. They were too ambitious in reaching towards a production rate of 250,000 ounces from the current 75. So what we've done is decouple that, put a stage in there that's a lot less challenging and fundable by us, given our current size. That's sort of that graph tells you a bit of the story. There was even though the production went down in the previous quarter, the reason it went down is that we were doing a lot of mine development, underground and surface, to get to the ore. So that change in September in production isn't just me coming in and changing the plan. It was, we had the use of the capital that was spent and access to that high grade ore. So we're mining about 10,000 tonnes a month underground at 5 grams. The surface mines are producing good grade, and we have a runway now that's clear for the next couple of years to maintain that steady sort of 17,000 to 20,000 ounces a quarter at that sort of 1,500 to 1,700 Australian, or better if we continue to focus on our costs and improve that. The main investment now going in the next 6 months is really, as I said, the pre-strip on a mine. Through a sale of some non-core assets, or the $15 million I need to put in to pre-strip the mine that's going to be feed from February next year, is actually being paid by the people I sold the assets to, because they're building a salt lake potash operation on those leases, and they need the dirt for their construction. So they're going to pay $10 million of that. It won't even come through our books. So I won't speak too much to this, but that's sort of the bubble show you that the first stage current operation is pretty well bedded down. Our balance sheet's fixed. We're now focusing on perfecting stage 2. That'll be ready to go in December and finish by the end of next year, increasing production to 100 to 120,000 ounces, and then the optionality of taking it to the full 250,000 will be worked on in parallel. That's the sort of main ore body, only really drilled down to about 500 metres. East-west ore bodies produced up 1.5 million ounces in the 30s. We intend to, as we get down there and dewater that area, we'll drill that area below out, and we've got a target there of about 4 million ounces of resource. The blue areas will be converted to reserve over the next 12 months. As you can see, we've got some targets, about 1 million ounces of new reserve that'll come out once we get down there and start drilling. Anyway, thank you for your time, and hope you enjoy the rest of the conference.